gentlemen, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Right. Look, potentially we should be getting a US government shutdown ending. After a prolonged period, and actually it's still ongoing, but after such a prolonged period, they are finally agreeing on a few things here and there. So, but let's see, of course, what's going to happen. It's not it's not really a done deal yet. So we'll wait, but certainly there is a little bit of progress. So, ladies and gentlemen, about all this and a little bit more in the webinar right now. So hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. As you can see by the sunlight, well, I'm calling you from heaven once again, you know. So, but no, of course, jokes aside. Look, ladies and gentlemen, welcome everybody. I hope you all had a fantastic weekend. I hope you're all feeling nice and refreshed. Look, it was actually also a busy weekend in terms of U.S. politics, and we had also some Chinese data, which I'll pick up in a bit. But let's see how all this is going to impact the market. Now, first of all, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. As I said last week, once again, the light will shift. I mean, like I said, the light will eventually shift. Don't worry. I mean, I will come out of heaven. Come out of this the spotlight. Look. Oh, by the way, in the meantime, also, good morning in the chat room. Good morning, everyone, as always. Ladies and gentlemen, I keep on saying that this show is meant for asking questions as well. You can leave your comments. If you have your, you want to express your opinion, for sure, you can do that. So, yeah, ladies and gentlemen, feel free to talk. Feel free to communicate. More than welcome, because that's the whole point of this show. Ladies and gentlemen, so also before we go any further, let's quickly have a look at our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And look, for now, like I said, if you do have any questions, we're more than happy to help you out. Look. Okay, economic calendar. This week we're starting off, yes, today is the 10th of November. We're getting closer to mid-month, and honestly, like, time flies really, really quickly. But what I wanted to pick up on actually first was this. On Sunday, we got on my time Sunday here, we got the Chinese inflation numbers, and basically this was a little bit of an interesting moment here. So the CPIs came out much better than the previous and the forecast. So the year-on-year number, look at this, jumped into positive territory. It has been a little bit of a problematic data set, I would say, for China, and leap, yes, there we go. And we jumped back into kind of positive territory after like 2 months, 2 straight readings of being in kind of just fractionally above zero. We actually being below zero, but before that we were above zero a little bit, not much, and now we're kind of jumping harder here. So look, on one hand, you would say, oh, but like higher inflation, that's not good. On the other hand, we can say that, look, we need a little bit of inflation, okay? We need to show growth, and China has been struggling with that lately. But now we're seeing, like I said, an improvement here. So what I saw that everybody in the West is kind of sounding alarm bells that China might overcome us and everything like that. Well, look, I mean, the world is big enough for everybody, right? Okay, I think that we need to show growth. Every country needs to show decent growth. There should not be, let's say, one better than the other, dominance or something like that. So anyway, but that's of course, that's my opinion. But in general, this is good. I think this is fine. I think the U.S. needs to worry more about kind of getting out of the government shutdown and providing us finally with some labor statistics, which the market has a little bit of skepticism about. So, and actually, that's this is a fair statement to make. Anyway, so what's happening this week? Let's have a quick look. What's happening this week? So today, it's really actually I think it's going to be a little bit on a boring side because we don't really have many data sets coming out this week. So I think there are a few interesting ones, but Australia is going to be the one that's going to be delivering good ones. Basically, the Westpac consumer confidence number. Look, tomorrow we have the U.S., Canada, and U.S. and Canada are going to have, like, I think they're going to have like some weird trading hours, but you need to double check that because last time I checked, it didn't really give me like a clear picture, but I think that the day will be shortened. If you are trading tomorrow, so the US and Canada, then yeah, prepare yourselves that the day will be a little bit on the shorter side. So just to kind of let you know, they are celebrating the Veterans Day. So yep. Veterans and Remembrance Day. So yeah, keep your eyes on the timing. Yes. Also going further, we have the Australian NAB Business Confidence number coming out early hours on Tuesday. So we'll keep a close eye on that one. But I think the big one will be the UK with its labor market numbers. Look, at the end of this month, we have Rachel Reeves delivering its the spotlight disappeared. There we go. So we have Rachel Reeves delivering the budget at the end of this month. So of course the labor market numbers are not really going to affect the budget, but it's just going to be quite interesting to see. And what we're gonna get, because at the moment the expectation is that we're gonna get like higher unemployment numbers in UK, going from 4.8 to 4.9. Still okay, don't get me wrong, 5% is still on the lower side, but of course it wouldn't be great if the number jumps above 5. Is that inevitable? Yes, it is. With the current situation with this whole AI progress, honestly, as I said before, and I'll say it again, it's good for the companies, but is it good for people? It's questionable. For some, yes. For some, there's always going to be winners and losers, unfortunately. But when the general kind of idea, or what we can call it, when the general kind of situation becomes where there are more losers, then certainly yes, that becomes an issue. So that's where we're really looking forward to see the US job numbers, which we're not going to get, of course, until the end of this month. So unless the USA comes out of the shutdown, and look, they already agreed on a few things, right? I mean, we saw progress during this weekend that basically they said that where's that wording? So where is that wording that I was talking about? So basically, it's like Democrats negotiated a deal to reopen the government with Republicans, Yeah, so they were back there. Of course, they have this issue with legislation, and so what I'm reading here is that they agreed on the package, which will include a stopgap funding bill that would reopen the government through January and fund other elements, including food aid and the legislative branch for the next year. So they're basically they're discussing all that. Also from the news that I saw this morning, that there was the U.S. Supreme Court kind of allowed Trump to block the $4 billion in food aid to families in need. That's another interesting move. And also, what can I say? And also another interesting kind of little piece of information that I read this morning was that apparently the U.S. leader is going to give a tariff dividend, which to every American, if they're not, let's say, wealthy enough, or so if they're wealthy enough, they're not going to get the $2,000 dividend. But if they're not wealthy enough, again, what is wealthy enough? I don't know. We'll have to wait and see. But certainly, and then they're going to give the 2,000. It's like a kind of a paycheck, I think, for people. And I'm assuming what they're doing, and this is what like I said, when I was talking about the U.S. dollar, that you need to boost the U.S. dollar a little bit in order to kind of make the consumer the U.S. dollar's purchasing power a little bit better when you're going into the holidays, and also if everybody's going to get the 2,000 before the end of before Christmas, then that's another major thing, another boosting moment, given the fact that there's going to be like midterm elections, I think next year, at the end of next year. So long story short, that everything is getting done right now to please the consumer. So the $2,000 stimulus, or sorry, not stimulus, we cannot call it that one. It's kind of a paycheck, so it's we can call it a dividend, whatever, it's like just money into people's bank accounts. So look, it's debatable, okay? So the prices become more expensive, right? So the question is actually, is this 2,000 that kind of was paid, by the consumer at the shops, and now you're kind of, it's kind of like a rollback thing. So you're kind of, cashback thing or something, that after like some time I'm giving, you're paying more, but then after some time I'm gonna give you a little cash back. So again, like I said, the fancy way calling it is a dividend, but the real kind of moment is to maybe call it as something like a cashback. Probably that's the better approach anyway, because again, things, because of tariffs, things became a little bit more expensive, and so at the end of the day, the consumer kind of paid for it already. So they kind of, and now they're getting that money, maybe part of that money, again, we don't know, part of that money back. So yeah, that's on Tuesday in terms of unemployment rate, casually slipping back into UK's unemployment. So we'll keep an eye on that one. Then we have German and European as a Eurozone overall ZEV economic sentiment index coming out. So we'll keep a close eye on that one. The German one is and the European one are expected to jump back up. Wednesday we're looking at Australian nothing here. Germany harmonized inflation rate final. Okay, now this is going to be the interesting one. The inflation rate coming out 2.3. It's on the lower side. As I said it before, and I'll say it again, that the German and the European numbers kind of tend to come out as expected. They're pretty much bang on the line on the forecast. So again, if it's always interesting to see, when they don't come out as expected, so by how much they deviate from the expectation. That's the more interesting part, if at least for me. So yeah, going further on Wednesday, nothing major. API crude oil stock change. That's probably one of the things to watch out if you're trading oil. And then going on to Thursday, PPIs. So yes, Japanese PPIs are expected to drop. The year-on-year number is expected to drop from 2.7 to 2.5. Australia, it's going to be Australia's turn to provide us with their unemployment rate. So, look, again, touching the subject of the labor market, we know that right now there's a lot of, like I said, a lot of cuts happening, a lot of layoffs happening. If if you don't know that if you just kind of, search online that, the recent big company layoffs or something like that, and you'll see, like just the names to name a few, like Amazon, and we're talking in tens of thousands, so sounded like the U.S. White leader right now, U.S. White House leader, basically in thousands of trillions and billions, so, but yeah, numbers are big. Nestle, I think they're cutting 16,000 jobs. Need to check what's happening with Amazon. I can't remember, but anyway, also there's like big numbers in there. Amazon announced that overall they're going to be like laying off around 500,000 people around the world, not only the U.S. but like around the world. So a lot of cost cutting, and yeah. I mean, what can I say? I mean, it's not a very good period, I would say, right now. So we can all be happy about AI as much as we want, but certainly if you're on the wrong side of AI, you're kind of you're screwed. Anyway, so look, going further, yes, the UK will be delivering another big set of numbers. GDP month on month, there we go. We're expected to see a little bit of a drop. The preliminary growth rates we're getting as well. So the preliminary year on year is okay. We don't have an expectation here, but the Q on Q, a little bit of a decline. Okay, that's interesting. So if we do get that decline, then certainly we could see a little bit of weakness in the British pound, in my opinion. So we'll see how that plays out, of course, because then look, if we see a little bit of weakness, that means that the BOE will be kind of on target, or let's say on the route to go and cut rates in December, because this is what everybody's talking about right now. They didn't do in recent meeting, they didn't do the cut. They just kept the rate unchanged at 4%. But the thing that the Andrew Bailey did kind of indicate that they are willing to go for a cut potentially, because also when I was, last week, I told you to keep an eye on that, on the votes, how many people will be voting in favor of the potential cut, and we had an increase. So it's now like it was like 4 people for a cut and 5 people for to keep the rates unchanged. And okay, this will flip eventually. So we'll see what's going to happen in December, certainly. But yep, we're keeping a close eye on the data here coming out from UK on Thursday. Going further on Thursday, very quickly, European stuff. We're getting some European stuff. Industrial production, very interesting. 2.3 the expectation against the previous 1.1. Well, that's a big jump. And of course, continuing jobless claims. So we're basically including another line here in the section here. I mean, we're including another piece of like a continuing and initial and continuous jobless claims. So we're now missing how many? 7? Yep, 7 sets of data. I mean, okay, including this week, sorry. So we're missing 6 in that case. We're missing 6 sets of initial and continuous jobless claims data. And I don't know how they're going to do that. Are we just going to skip that? Skip the previous ones and just going to say, oh, you know what, let's, just ignore that, and just because we were in shutdown, so now because it's going to be easier to give you the number what's right now. So most likely that's what's going to happen. But again, we'll see. CPI numbers. These are sitting on the calendar here, but again, I really don't know, like, what's going to happen. Are we going to see the government kind of coming out and ending the shutdown, because this is what the clock looks like, the 40 days now. And where is that? Are we going to get the CPIs this week? Well, it's going to be quite interesting to see. But for now, they're on the calendar. I don't think that this is going to happen, to be honest. because I don't know. Like honestly, this is one of those moments where you actually really you're trying to find some sort of logic. You're trying to justify things. You're trying to like think, okay, this could be this, this could be that, and like occasionally I do come across the situations where say it's difficult to determine something, and to give you some sort of like an analysis or something. But in this case, like it's really like the I don't know moment. Like, are we actually going to get? Yes. I mean, this is like I said. We're waiting. We're watching. Let's see what's going to happen. Let's go day by day. I think this is the easiest and less stressful approach. So yes, going into Friday, China industrial production, retail sales, and employment rate. So that we're going to keep an eye on that. And going further, the European Eurozone trade balance coming out. So together with the preliminary kind of GDP numbers. Okay, U.S. core PPI in general PPIs headline and core coming out. Another inflation metric. So we'll see. We'll see. Honestly, like there's no, I do not have an opinion on something that, it's unclear if it's going to come out or not, because it's, like I said, we need to first see what's going to happen with the government shutdown. Yes, they have announced that they are planning to get a deal, but then there's this package that they're going to try to agree on. It then has to go to the, it then has to go first. Where is that? Where is that? The House of Representatives, and then it has to go. So the first it goes through Senate, then the House of Representatives, and then it gets signed by the leader of the White House. Okay. So that's what I'm saying. That's why it's I don't know. We'll see how it goes, but I think that in general, if you really want something done, I think it can be done quicker. But anyway, let's jump into the charts, ladies and gentlemen. Let's have a look at what's happening with Nikkei in general. Let's have a look at what's happening with the technical picture. Okay, look, beautiful rebound from this 20-day SMA here, shown in which is the middle line. Yeah, like it's a good move. It's a good rebound. Are we going to go back all the way up here to the current all-time high? I don't know. I don't want to rush into things, ladies and gentlemen, so that's why probably the arrow needs to be this way. So if we do, stay, if we do stay above, somewhere above, the 20-day SMA, and or we pop back above the 51,413 zone right here, then yes, great. More buyers in a way could join in, but my preference for the downside actually is maybe to wait for a drop below Friday's low, which kind of coincides right now, almost coincides with the 20-day SMA here within my Bollinger Band, and this way, if we do get a clearance of that area, wonderful, more sellers here could join in. This is, like I said, this is the idea right now. Also, jumping into China, Shanghai Composite, we're seeing a nice development here. So I think that the slightly higher inflation numbers are welcomed by the market here, although they should be a negative thing, but I think it's a different story right now. Everybody was kind of hoping to see growth from China, and this is the big thing for China right now. I think this is the fact that we saw inflation picking up. That's like I said, that could be seen as a good positive, and for the Chinese economy, unless inflation starts spiraling very very fastly, very very fast to the upside, and then then the kind of the inflation, the higher inflation becomes somewhat of a bad news. But at the moment, it's on the good news side. Dow Jones Industrial Average, let's have a look at this one. So basically we look, okay, right now I think the cash index, if I'm not mistaken, let me just double check very quickly. I think the cash index right now is a little bit on the higher side. I know that the S&P is rebounding very strongly. Let me just double check here. 6,728, that's where we were. Yes, we are rebounding quite significantly. So we're actually above this barrier right now, this one right here, the 6,764, and the cash index. And okay, well, if we do break this downside line, then great. I'm going to get a little bit more comfortable with the upside. So this is what I said to you last week. We're climbing back above the 20-day SMA. That's great. That's good signs. But again, be a little bit more on the careful side. Do not rush into things. If we do get a clearance of this downside line, that's from where I'm going to go to the upside. Dow Jones Industrial Average, like I said, it's actually, this one is a little bit better. It looks a little bit better, and let me just check where we are right now. 47,086 ish. Okay, we're above, but we're somewhere around here. Okay, we're somewhere near this downside line, right? So we need a clearance. So we need a clearance of that downside line, and we need to see the kind of the body of the daily candle staying above this area. So if we can get that move, amazing. More buyers could join in. At the moment, it's a tricky one. So do not rush into things, ladies and gentlemen. And hey, just like I said, be a little bit more on the careful side. So, like I said, we looked at the S&P, NASDAQ. So, NASDAQ, after a significant decline we saw last week, we are recovering. The market is recovering. I think that there were some positive comments from Jensen Huang and about AI in general. So how great it is and how beneficial it will be for everybody. And it was speaking at TSMC event. So yeah, that kind of gave the market a boost, together with the whole idea that the U.S. government might come out of the shutdown. So all these factors are kicking in. China's increased inflation kind of a little bit, it also provides more kind of stimulus here for the market this morning. So we're seeing, like I said, we're seeing positivity across the board. Now, I don't want to rush into things. I want to take everything carefully, seriously. Are we seeing like a little bit of a retracement back up before another possible leg of selling? In a way, we could say that, but we are seeing a violation of some of key areas of resistance, like in some key trend lines, so downside lines specifically. So yeah, that's why I'm going to be a little bit more on the careful side. I'm seeing, like I said, I'm seeing some positivity right now. 25,000, where we are, 384, 85 zone. So we're basically back above this upside line, back above the we're actually near the 20-day SMA. We had a decent jump. So you'll see a nice little gap here to the upside today. And to me, look, okay, somebody might say it could look like an island reversal. Okay, let's not rush. For me, like I said, the upside scenario, and I'll stick to my words, it's a move back above the 25,700, and if I can get that move, I will get a little bit more happy with higher levels. So now then, let's jump into the German index DAX. So we're seeing a nice positive move here to the upside, gapping up. We're filling the gap, or trying at least to fill the gap. Look, if we do stay above the 100-day EMA shown as the blue line here, I'm going to continue probably targeting the upside. So yeah, that's what I'm going to do, to be honest. I think that this is quite logical, so why not to keep, like I said, stay above the 100-day EMA. If we do fall below the 23,684, then I'll consider a move lower. The FTSE 100 pushing higher, and this is an interesting one. Look, I talked about this. I said, look, keep your eyes on the 23.6. We might reach it. Tick again. Yeah, we did that, but we didn't really reach the 38.2. So, and actually, what I was hoping to see here, to be honest, and I'm not gonna lie, that I was hoping to see a move, like maybe this one kind of staying maybe above the 9,700 and 9,700 zone ish, somewhere around, or 697 ish. I was hoping to see this one staying above it and maybe then kind of ranging for a little bit more, but it got really not very attractive. So I think what I need to do here, I need to remove everything because the Fibonacci's were kind of working, kind of not. So that's why, I don't want to rush into things, ladies and gentlemen, but certainly if you're looking for some higher levels, there is a chance, but a confirmation break above the 9,787 zone is needed. For me, now at this point, the downside scenario is in a break below Friday's low. It's not the lowest point of last week. Last week, the lowest point was on Tuesday. But I would actually start looking at some lower levels if we do clear the 9,639 zone. Let's have a look at what's happening with DXY. And look, we're having a nice little retracement here, which now the question for me is, like I said, is going to be, are we actually going to get a rebound from this upside line? Either way, I think my preference is still to wait for a push back above, at least back above the 200-day EMA, shown as the white line here. For the downside, if we do clear the upside line and we drop below the 99.14 zone right here somewhere, then yes, great, more sellers could join in. And then we'll take it from there. Let's jump into the Forex world, ladies and gentlemen. AUDUSD, beautiful pop back up. Of course, the weakening of the US dollar. Oof, my microphone just fell down. Sorry about that, ladies and gentlemen. Yes, I just knocked off my microphone. But yeah, look, the fact that it's pushing back above the 0.6520, that's a good sign for the bulls here. We're now testing the 50-day EMA, shown as the green line. If we do clear that, I'm going to go further north. Is it the strength of the Australian dollar? I don't really think so, because it's more of a weakness of the US dollar, because it's, yeah, at the moment that's kind of carrying a little bit more weight, because if we look at AUDNZD, this one's actually on a, right now it's correcting a little bit lower, but it had a fantastic run for like how many days now? Okay, if we're, let's say, okay, for the sake of it, we're not going to count this candle here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is the 12th candle right now, the 12th daily candle. For 12 days, we have been in positive territory, unless today somehow everything will change and it's gonna just reverse lower. But if it does that, I'm gonna welcome this, because maybe a little bit of a nicer retracement here, back down could be great. All right, and that's why I have my downside scenario from this 1.1490. If we do drop below the 1.1490, which is the highest point of September of 2022, then yep, I will, like I said, I will go lower here. But any retracement all the way back down towards this area, and if we continue to trade above it, that's what I'm going to consider a possible retracement, but a hold up here and then maybe a push back up. So this would be my ideal scenario. AUDJPY pushing nicely. Yes, the world is going back into risk on, and we are seeing equities rallying. So maybe we could see this one actually popping above the 101 zone and kind of staying above it. If it stays above the 101 zone, then great, I'll go further north. Let's jump into EURUSD very quickly. EURUSD pushing back up. Yes, weakness of the US dollar. It's helping the bulls here. But look, I will say it again. I'll probably go with an unpopular approach here, and I'll wait for a break of this downside line. You can already start looking at some higher levels if we do continue to trade above this 1.1542 zone. So basically, this thing could happen here. But if you're not really comfortable with this idea, then you can wait for a break of this downside line, which again is also a little bit on the tentative side-ish, kind of, yeah. So that's why It's a tricky one, I think, at this point. I think yes, there could be some upside, but we could find some resistance levels somewhere near still near the 20-day SMA, or maybe this 50-day EMA shown as the green line, or maybe eventually this downside line. Euro NZD, one of my favorite ones here. There we go, drifting back down. NZD is kind of getting a little bit on the stronger side, but we're still above the 2.0485 zone right there. If we do stay above it, I'm going to go for the upside. For the downside, a drop below this 2.0485, and yep, that in a way is opening the door, or could be opening the door to some lower areas. Quick update on Euro GBP. Okay, could be a bullish flag, but I need a confirmation break above this barrier right here, this 0.8818, and then we'll go from there. Jumping into another euro pair, maybe, let's say, like I said, if you do have any preferences, ladies and gentlemen, you can always drop me a comment in the live chat. So Euro Aussie, what's happening here? Okay, I like this one because it rebounded from my area here, the 1.7592, 93. I think that the 200-day EMA eventually could coincide here with the lower side of this little range. But if that's the case, if we're going to be testing this area again, look, we're increasing the chances for a potential breakout, you know. So whenever we start testing a key important area of resistance or support, this kind of tends to be like, you know, a moment where the more you test, the more it vulnerable becomes and eventually breaks, you know. So yeah, we'll keep an eye on that. Certainly jumping into the GBP, because that's going to be the focus this week. We had a great run here. We did drop lower until 1.3015, but then we didn't really reach that psychological 130 zone. So we're rebounding right now back up. I'm not going to rush into things. I am going to just, as long as we stay above the 1.30, 142, I'm going to continue targeting the upside. Let's jump into USDCAD here. USDCAD drifting lower. So we are approaching this 1.3986 zone, 76 zone right here. I think it's going to be a key area of support. I talked about it. I said if we do drop back below this hurdle, the 1.4080, I'm leaning towards the downside, towards this area. So far, so good. Everything's working like a charm. USDJPY pushing back up, and I think there is a chance to break this 154.48 zone. If we can clear that, then I'm gonna go higher, but I have a problem, like I said, with some of these levels in a way. Yeah. USDCHF. Just a copy of DXY, and yep, we're seeing a nice move lower, and we're finding support near this or above this downside line, the broken downside line. So in a way, this is a good plateau for a possible rebound. So let's see if the market is going to listen to me. Okay, ladies and gentlemen, let's jump into the commodities, because gold is on fire. Look at this. I mean, we've popped above the triangle, the upper side of the triangle, and yes. Well, this is what I talked about last week. I said to you that yes, although I am leaning a little bit more towards the downside, because theoretically, because we were in this triangle, the prevailing trend was to the downside, and in a way there was a greater chance for this one to break out lower according to all the textbooks. But what I said to you as well on Friday, that because we're closer to the upper bound at that point, let's not rush into things, okay? And maybe, you know, exceptions happen, and this is one of those. So there we go. We got the breakout, pushed higher, testing the 20-day SMA here. We're currently struggling to overcome it in a way, or should say stay above it. But if we do stay above it, I think that this is where it could go further north, potentially maybe even to these highs near the 4,150 zone, around there. Silver, bear with me one moment. Now then, silver. We are knocking on the door of that 50. Let me just check. We're currently going back to that 50 zone, so it seems like that, well, we're really struggling with that 50 at the moment. I think that, yes, silver is an interesting one, but again, I really don't know if US dollar somehow picks up. We could see another hit on gold and on silver. So yeah, keep your eyes on that, ladies and gentlemen. I said too that I would like to see a retracement. I would like to see a bigger move back up, and I would like to see maybe that 50 zone getting tested. But again, at the same time, given that we are in a historic moment, look at this. I'll show you on the chart here. We are at a historic moment. We did kind of rally significantly, and this is what I'm looking at. I'm looking at the monthly chart, and look at this. So this was back in 1980. This was back in 2011, and we're now here. So if somebody's going to tell me that this is not going to go down at some point, I will say you're crazy, because it will. It will go down, and just the only thing is we don't know when. It might actually rally for another year or something, but something tells me that we need to keep a very, very close eye on silver. Also, from other metals, platinum pushing back up, being very cautious because we're still below the 20-day SMA, and palladium. Now, palladium is an interesting one, and palladium looks a little bit more bullish, to be honest, but I think that let's not rush into things yet, because there could be a few things here and there happening, but like I said, for now, let's keep an eye on this one. But the fact is that we are actually, yes, we're above all the EMAs, but we're below the 20-day SMA, and that's where the issue arises. We could see a push back up here, maybe a retest of the 20-day SMA, and then we could see a drift back down. Let's have a look at the copper. Copper is still above this 20-day SMA, so in a way, where everything is kind of still somewhat pointing to the upside, but I need a push above this barrier, above this 1026 zone right there. Let's jump into sugar. Sugar is one of my favorite ones, still holding above this 1409. And if we are going to continue sitting above that area, then look, I would ideally like to see a push above the 14.74 right here. If I can get that move, I'm going to go higher. But if we do drop below the 1409, then yeah, I think it's going to go for a forthcoming lower low in that case. Soybeans. Pushing back up, beautiful rebound from this highlighted zone, which I talked about. It got broken, but now it could take the role of support in a way. WTI oil. Okay, look, I said it before, and I'll say it again. I am somewhat bearish on oil and crude oil, but given that what's forming right now, what I'm seeing here on the charts, it looks like a bullish flag. So again, that's why I'm not dismissing the upside scenario. But again, look, the upside scenario, only more of as a just kind of shot, like a rapid shot to the upside, and kind of that's it. WTI, Brent oil, similar story. This one's in a more clear triangle pattern. So a falling wedge pattern here. So if we do break somehow the upper side of this triangle, then yeah, I'm going to consider slightly higher areas. And natural gas, continues its journey higher towards that psychological 5 level. So keep your eyes on that one. And ladies and gentlemen, finally, the crypto world. So Bitcoin rebounding. Look at this, rebounding, and most importantly, we're traveling back above the crossroads of these two trend lines. So also we have approached the 38.2 on the Fibonacci, retracement, and we'll see. Currently we're seeing a hold up here, so let's see if actually it can overcome this. If it can overcome this hurdle, this 106,000 and a half zone, then yeah, I'm going to lean a little bit more towards the upside. Bitcoin Cash, similar story, beautiful rebound from this 462 zone. Great, and in a way, yeah, it's for now, these are the barriers. You know, these are the barriers for the upside. I cannot really say much because there are some issues. There are some issues, and you know, if we suddenly still don't get the government shutdown end, then I think that this might actually fall a little bit lower. Ripple very quickly. Ripple, ladies and gentlemen, pushing back up. Okay, look, as long as we stay above this little hurdle, this 2.3762, if we do push back above this hurdle, then I think that there is a chance for a little bit of a larger correction back up. Ethereum, we're stuck near the 200-day EMA as shown as the white line. We're stuck below the 3,650 zone. Probably, you know, it's how to say it, it's a tricky one because again, at one point we did rebound significantly, so we could see, you know, a continuation move here, but we're still below some key barriers, and if we do get a clearance of this downside line, then yes, I think I will get a little bit more excited with the upside. Litecoin is also pushing kind of higher here, or well, it was pushing higher. I really like Litecoin. Look at this, it jumped above my key target of this 100.5 zone. We also tested my 108 territory right here, and now we're retracing back down. Look, even if we do retrace all the way back down, if we stay above all these EMAs, then I will continue targeting the upside. Dogecoin also beautiful recovery, and we're currently oscillating around the 0.1785, so and below this 20-day SMA. So look, I'm still not giving up on the downside scenario, but certainly with the current boost here, I think that there's a good chance of traveling towards this downside line, which is taken from the high of the 13th of October. Polkadot, just a quick glance, we're back above 3. Wow, I mean, this is just, wow. We broke the downside line, we tested it from above, so everything according to all the books and everything, and now we're leaning towards the upside. So to be honest, I think I'm going to stick to that and just kind of you know, put my thoughts, my negative thoughts about the instruments going further south. I'll put these thoughts a little bit away. And finally, Tron. So yes, bringing back up here, and I think that my preference is to wait for a push above the 0.2985 zone right here. It's a good area of resistance. It was a good area of support previously. So now let's see if this resistance can get violated. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. But yeah, thank you all, and I hope to see you on Wednesday in my other Markets Talk webinar. It's going to be the midweek review, so we'll see. Maybe we'll have some clarity on the U.S. government shutdown, but of course, for now, like I said, the first step of positivity is there. Let's see if they can actually deliver. Ladies and gentlemen, I'll see you later. Bye-bye.